Show me the chart and I'll tell you the news. Have an opinion on what the market should do, but do not decide what the market will do. Be happy with a percentage of the move. Bernard Barak. Welcome aboard, everyone, to a new session of charting across the board. Today, the unfolding events for the periods of risk of 2025 and 2026. As you guys know, technicals are a shortcut of what the fundamentals are presenting. At least this is based on what Steve Neeson suggests, the author of Japanese candlestick, who popularize Japanese candlestick into the West. On today's action, or today's price action, I would like to go into the S&P 500 as well as Bitcoin, the similarity of these patterns that are presenting, or what the patterns are presenting based on these two trading instruments. To refresh part of the argument, as you guys already know, we were looking previously at a Wyckoff distribution on the price action of BTC. Keep these levels in mind, or this analysis, this technical proposition in mind. Why? Because what the S&P is printing could be potentially something within the same structural formation. Okay. To go into the price action of Bitcoin very briefly before jumping into S&P 500, we're gonna be moving back and forth into this trading instrument. However, to start with the price action on Bitcoin, to keep in mind, you guys are already aware that we were trading within the Wyckoff distribution with a nap thrust after distribution, okay? Projection to the lows. Where are we currently? We printed a new low at 78,000 now, retesting the previous structure support in this case, now manifesting as resistance, okay? So therefore, the new resistance levels on the S&P, on the price action for Bitcoin remains at the previous lower trend line of support, now potentially a level of resistance, okay? Yes, there was some news last Friday, I believe, or during the weekend, after the price action of this move, this upward traction. However, if you guys remember, we were also looking for that information, a bullish structure. However, our projection was a 76,000 region for this bullish deep crab pattern at the 1.618. We were pretty close to those levels, okay? Very close. However, if we anchor, if we're permissive and anchor the exponent structure slightly higher, the 1.618 was indeed tested, right? If we are permissive within this harmonic framework, okay? Reaction of these upward or of these lower levels after presenting a completion point of a bullish structure and information. Though, keep in mind that as of now, Bitcoin is still printing lower highs since its all-time highs, okay? There are some pseudo traders calling for higher levels, but we're approaching the levels objectively, okay? Why these levels is important now? We're tracking now the performance of bullish structures in a downtrend, okay? Previously also, the information, the larger information on the daily or the 12-hour was printed as a bullish deep garly, right? A deep correction in this case at the 0.886. For those of you unfamiliar, we're talking about Fibonacci retracement, okay? Pulling the anchoring point from the lows to the highs, a deepest level of retracement for the 0.886, okay? 0.886 in this case was 91,600. That was indeed a level of support before the upward traction, right? Reactive move only. However, underperforming within this downtrending market that is, as of now, is still in a downtrending market on the 4-hour, the 8 hours, and the 12 hours, potentially now shifting into the daily and then, of course, consecutively to the weekly time interval, the primary trend. Okay? So once again, keep these levels in mind. The analogy here on the Wyckoff distribution on Bitcoin. Why? Because the S&P, we already presented these arguments in our room a week ago, that the S&P could potentially be working in a similar manner into another Wyckoff distribution, okay? Bring that chart in mind. If you guys keep these levels in mind, right? The same trading range, support at the lower trend line, resistance at the upper trend line, okay? Similar condition. This one was Bitcoin when January 26. We were already looking for this potential outcome that indeed has manifested as of now, right? From the 105, we printed a low to 76,000 region, okay? Once again, we're approaching the markets objectively. What occurred from these levels will be new data, new levels of support or resistance. As of now, previous structure support is now becoming a level of resistance. Very simple, okay? Do not overcomplicate your analysis. Now, keeping these levels in mind, okay, in the price action for the S&P 500 now, if we keep this Wyckoff schematic and moving into the price action of the S&P 500, you guys can observe the similarities of these two trading instruments. Now, we rejected at the last point of supply and printing the sign of weakness yesterday, I believe. Printing a new low of the previous January lows. That was the sign of weakness in phase B. Now, this range where we bounce from is the last point of supply if, okay, big if the S&P 500 is printing a similar structural formation, distribution schematic in this case, we are potentially heading lower, right? Despite the low at 57.44, we might heading lower. And why these levels are now important. If you guys remember, we're looking for the complementary ratio of the bigger ABCD structure previously presented also in 2022, okay? Keep these levels in mind, my friends, because all of these represent key technical levels within the price action on both instruments, on the S&P as well as Bitcoin. Why? Because we're now going to be moving from the primary trend, okay, which is the monthly in this case. This pattern was presented on the monthly time frame, an ABCD structure. At that time, the sentiment back then, once again, fear, now we're euphoria, and why these levels are now important. After the support zone was founded at the 50% correction from the A to the B, the theory that a 50% correction will occur prior to advancing to a new upward traction or the next leg of the move from the A to B to C to D, which is the same length of the move between the lengths A and B. The same reciprocal ratio will be achieved between C to the D, okay? And now that we are here hovering at 61, 62, I believe was the highest level on the S&P 500. You guys need to make sure this one was presented on the S&P futures. There might be slightly different levels on the cash market or the spot market. However, the same levels apply here, or the same formation applies here, okay? This is a very critical level, in my opinion, as to what is coming next, the periods of risk. You guys know that these time frames or these time intervals, the monthly and the weekly, takes time to develop. Clear observation, clear manifest, or this clear example, I should say, was that this took nearly 2 years to complete from December 05 of 2022, right? It took very long time. However, the sentiment has been shifting from bearish to bullish the entire upward traction, printing nearly over 64% move from those lows, right? Now, there are other pseudo traders looking for higher levels. It can always be the case. Of course, I'm not trying to pretend to know everything here, rather presenting the same arguments that we have been approaching over and over. To jump into another chart, okay, keeping this one in mind, this is the monthly time frame. Back then, our projection was to 4,700, okay? 4,700, now jumping to a next execution back then, okay? From that lows, okay, from those lows at 3,500 or so, 4,000, expectation to all-time high at 6,000. However, in between there are pauses prior to jumping into the next level. And keep these levels in mind once again, especially on this W formation. This W formation, I believe, now becomes a key data point in the price action for the weekly structure. From the support levels at 4,000 and change, we were expecting 4,500, where I also particularly executed a short position, right? Back then at 45 and change, I believe we exited earlier and then we jumped back into that trade that took us to these lows, okay? Then, back then, another information was presented for a major bullish rally. And since then, this is from November 2023, okay? Almost a year later from the first projection, December 05, 2022. Then, of course, a year later, almost, we move into November of 2023 after the upward traction, the first leg of the move, the first test of support. You guys know that we're moving into levels, right? Support becoming resistance or resistance becoming support and vice versa until new development are presenting in the price action. Now, the main point in my case, in this technical observation, becomes to this weekly time interval. This one was a pending, as you guys can observe, a pending W formation. I know we were already navigating these levels before. However, I came with a data point that caught my attention, the 1.90, which is a complementary ratio of the 1.618. Okay, so keep these levels in mind. Pending W formation, we were adding new variables of confluence for a symmetrical formation. Okay, symmetrical formation that have a height of the move as a projected level for target matching the 1.618 at 56.47. Okay, this one, keep in mind, was from November 1st of 2023. What occurred after, okay, and this is where the levels of confluence become key levels for the periods of risk of 2025 and 2026 in my particular opinion, in my interpretation of the technical information. Okay. Now, moving into the current level, okay, current price action from what occurred back then, this is where we are. It seems that we are far from those levels, but again, keep those levels in mind. After printing a new all-time high at 6,000, that was from the main projection, okay, the monthly, now the weekly, and now potentially the daily, working into that sign of weakness. Okay, this normally occurs after a major turning point in the market, distribution at the highs, accumulation at the lows. Okay, so therefore, in my particular opinion, we are still within the levels of, or the periods of risk. Okay, you can observe that these levels are becoming weak and weak and weak. There is not many bids catching any major follow through. Therefore, in my particular opinion, distribution is what taking place currently in the price action for the S&P in the same manner that has been occurring for Bitcoin, as already explained. Okay, similar pattern proposition. Now, moving into the current information, once again from this prior W formation, we jump now into the current information from that projection. Back then, this is what occurred, right? The measured move of the structure, we achieved indeed the 1.618, and what occurred there? A rejection, a first reactive move of that W formation with a 10% decline, or nearly 600 points. Okay, 586 points, nearly 10 to 11% decline in the price action for the S&P, which, as you guys are familiar, this can be interpreted as a type 1, certainly. Type 1, for those unfamiliar, is the first reactive move of the completion point of any M or W formation. In this case, a W formation, creating that first rejection. Okay. However, type 2 returns is another retest either of those highs or slightly high. Okay, in this case, a W formation with completion point at the 1.618. The complementary ratio of the 1.618 is the 1. Someone can tell me or type that in the chat. Is a 1.90. This one is more between the 1.90 and the 200. Okay, you guys can observe that we are certainly still fighting at those highs. Okay, type 1, the first reactive move, when normally prices navigate and test the previous high, or also test the HOP, as Scott Carney calls the harmonic optimal price. So therefore, are we within the harmonic optimal price, or the type 2 return, which is another retest or slightly high from the previous highs of July in this case? Okay, are we at the levels or the periods of risk? In my opinion, that can be the case, especially if we go and break below the 1.618 at 56.47. Okay, 5,600 will be a key level. We break below, and there might be an argument, a stronger argument for the type 2 return in this particular time frame, the weekly. Okay, the weekly, in my opinion, we are indeed printing the potential type 2 return as long as we violate or break below the 1.618. Why? Because the entire range now becomes a distribution, a trading range on the weekly. Now zooming into, of course, the daily time frame, you guys can observe this particular time frame, or this particular development that is occurring on the daily. Okay, moving from the monthly, we have the major ABCD structure. On the weekly, the W formation with the reciprocal move with the 1.618, and now on the daily, of course, major profit taking levels on the daily. Okay, also another interpretation is the anchoring point of the Pittsburgh, where rejection at the medium line. Okay, this one or this trend has indeed been weakening since then after the rejection of the medium line from the research of the work of Andrew's Pitchfork. Okay, where also we presented the argument in our room that the prices on the S&P were indeed presenting levels of weakness, especially after breaking below the support level of the trend line, the lower trend line of this Pitchfork channel. And now a shift in sequence, printing a lower low than the previous low. Okay, where with the eyes you can observe we have been coming from an uptrending market, and if we're printing a new development in the price action, we are certainly now working into a new trend. Okay, therefore we can apply the Pitchfork channel once again, a very easy interpretation for trending markets, uptrending markets or downtrending markets. Where are we currently? We anchored the previous high to the lows, back to the highs. We are indeed breaking below now the medium line that was previously a slight support, only to present as a last point of supply before presenting this sign of weakness. Okay, within once again the Wyckoff schematic. And this is where the price action and Bitcoin are presenting similar readings. By the way, we're looking for March 16th, potentially for at least in the short-term trend, a cycle low on BTC. Therefore, up until then, we can potentially expect or speculate that lower levels may still be printing based on time projection, time analysis. Okay? We are only respecting all of these readings since the beginning of the bull market, and now we need to start, of course, getting ready to when the new trend may start shifting from upwards. Okay, we have been indeed enjoying this entire run to potentially at least a correction, right? We will see. Okay, you guys know that many are late in the game. This is often the case when the blow off top may be in the cards for many. I was making a joke the other day that potentially that blow off top already blew away. I do not know, but the conditions, we have the ABCD structure, major 200% projection from the C to the D, bull market indeed printing 72%, even 75, right? The sentiment bearish, now the sentiment still bullish-ish, I believe. But to me, the periods of risk that we were projecting since 2023 is now being unfolding, in my opinion. Okay, if you want to watch our projection, previous projection from last year, there are plenty of levels on, or plenty of links in the YouTube channel. If you would like to revisit those levels, there are plenty of information from July 2023, I believe, from the previous room. By the way, in this journey, myrob6.com is not only me behind this stream. There are other traders in the room that we were all merging from market makers. I'm going to give the name because many of you are asking, where can we find you? Where did you go after leaving that group? Pretty much all the traders from market makers, we move into this new project in that case, because we are traders who respect the technicals. All we care is to approach the markets objectively based on an unbiased approach. Okay, we do not want to interfere with anybody's opinion in the market. However, we are in this journey only to follow a passion that we all love and enjoy, charting and trading. But keep in mind that none of these represent any financial advice, but rather an interpretation of the technical information. Therefore, in my opinion, once again, the periods of risk of 2025 and 2026 are now unfolding, where, in my opinion, I'm strategizing positions now, giving the favor towards the downside. Okay, this is not being bearish. not being bullish. We are once again traders who like to trade the market. By the way, at the opening, the reading from Show Me the Chart and I'll Tell You the News was also brought from another member the other day, Flower Gardener, in our room, as this is a famous quote, right? We're now seeing the unfolding event. Back then, we did not have any idea of what the outcome will be pretty much from that time. And I'm referring to this major ABCD structure that was presented back in 2022. We did not know what the outcome will be at these highs, but we were expecting that some turbulences, of course, may occur. And now we're observing tariff, trade wars, sanctions, and so on. Will that be the case for what the outcome will be into the news or into the new trend? We will see, my friends. I have no idea, but the chart can give us a clue to what may occur next. Currently, we are trading within an exhausted market after pretty much a 2-year rally, right? Bull market also needs to rest. So therefore, the bears may have their turn. Not back then, not then at the lows, right? This is not where we become bearish at all. So therefore, are we shifting from the bulls to the bears? We will see, my friends. As I said again, I don't have all the answers, but if we respect the technicals, we can observe a bearish structure. And ABCD reciprocal also, if we look at the momentum indicators on the monthly, keep in mind, this takes time to develop. And for me, we are already unfolding these levels. Higher highs in the price action, okay? Divergence class A, one of the strongest bearish divergences within these contradicting variables, right? Higher highs in the price action, lower highs in the RSI. It's time to rest. Everyone, thank you for being here. Remember, none of these represent any financial advice, but rather an interpretation of the technical information. Please remember to stay objective. And if you want to take trading as a career, please do me a favor. I'm not associated with Topstep, but after doing my own research, I believe it's the only proprietary company in this business or this industry that really focus on making traders or making traders better. Do yourself a favor, try yourself. This again, no affiliation with them, only after testing myself, okay? I did my research coming from a swing trader. I am a swing trader, meaning I trade based on larger time frames. However, I had to accommodate into day trading, right? Only to prove myself, right? Only to keep growing as a trader. So therefore, it's the only proprietary firm, in my opinion, that can give you the levels you need to remain this business. Why? Because you're not risking your own capital. This is only going to help you to become better, in my particular opinion. Once again, I am not affiliated with them, but I believe it will give you the psychological strength that every trader needs, okay, the risk management and the profit-taking levels, which trading is about. This is now about forecasting, okay? We're not making capital or money here by forecasting, but rather getting involved into the markets. Once again, none of these represent any financial advice. Thank you everyone for being here, and I'll see you on the next one. And remember to live a life with an attitude of gratitude. Cheers.